What's up everyone, my name is Anthony, and in this video, I'm going to give you a brief overview of the current status of the broader markets, and then go into some specific wave counts and technical analysis that'll kind of give you an idea of what to expect as we go into next week. And obviously this week that we're going into is going to be a holiday weekend, so there'll be no trading day on Monday, but this still gives a broader idea of what will happen on Tuesday, Wednesday, Thursday, and Friday. So let's start off on the SP500, which is here on SPY. So to zoom out a little bit, I want to focus on this wave count in purple first. So overall, we're in a wave 5, and within this wave 5, we have a subdivision. So a wave 1 up, wave 2 down, wave 3 up here, wave 4, complex correction. And now we're working on this wave 5. And within this wave 5, I want to point out this count in golden yellow here. So this is a really important count, and if I zoom in to the 15-minute time frame, we can get a little better understanding of what's happening within this golden yellow count. So overall, we have a wave 1 pushing off right from this complex correction, wave 1 up, then a complex correction for a wave 2, and now we're working on this wave 3 upwards, and we're around 65% done with this wave 3, so there is some more upside to be caught within this wave 3, and then we can expect a wave 4, likely to retrace some of this upside that we've gotten here over the past couple of weeks or so, and then a push upwards for this wave 5 to finish off the bull markets, and then we'll head over to very high risk areas where we're entering the bear markets that will correct a lot of the upside since the previous COVID rally. So if we zoom into this wave count and we zoom in to the third wave, so here's what we've been seeing over the past couple of weeks or so. So we can subdivide it and we can say that this is a wave 1, 2, and we have a 3 in the formation of going right now. So we have a wave 3 of 3, which is a very powerful move. And as you can see here, we did have that pretty strong upside. And now we can expect a mini wave 4 retracement up for a wave 5 to finish off this very small degree wave 3, and then another wave 4, wave 5 to finish off this golden count 3, and then we'll come down for a wave 4, and then push over for a wave 5. And this makes sense. This will take around a month or so, maybe a little bit less, so that gives the right timeline that we will have for the bear markets to start around somewhere in July, August. And that's what we're expecting, and so over here we can expect the risk to really increase, and that's why I'm going to start to try entering puts, longer term puts on the market, but overall we're not there yet. We're still in bullish territory, and as you can see, we've had some really good price action over the past couple of weeks or so, and it is a little bit unexpected because at first the price action over here was very non-impulsive. It did not look like it was trying to go up significantly, because we see here that it just kind of straight increased. There's no peaks or retracements that really give you the ability to kind of break it down in terms of wave theory. But then we started getting some more retracements, especially as we started getting up here, and that made it really a lot clearer to subdivide it in terms of Elliott wave theory. So now we can see within this wave 3 over here in 3, we can subdivide that further. So we're getting an extended wave 3 of 3, which is very common in the markets. So we have in this wave 3 a wave 1 up, a wave 2 down right here, and now we pushed up for another wave 3. So if you subdivide this 3, you could even do it more. You could go like a 1, 2, 3, 4, 5, and then we can expect a retracement maybe to the trend line over here, and a bounce off, and then push upwards to complete this wave 3. So overall, I have some price targets written out here. So these ones are the most important because this targets where the golden yellow 3 should finish off. So the most aggressive target would be around 439, and the more conservative areas would be around 436 to 434. And as you can see, we're kind of approaching these areas, but we're not quite there yet. So there is some room for some more upside. And because we haven't gotten many retracements for wave 2, there is a thing called alternation of wave counts, where if you have a light retracement for wave 2s, then the wave 4 will be a little bit harsher. We have yet to see that still, but overall, we could see a little bit of a pullback for wave 4, and that will present a really good buying opportunity for some calls to try to snag a little bit more of this upside for the wave 3. So that's just a trade plan for the next week. I'm definitely looking to either catch some of this wave 4 downside if we are able to catch it, and if not, then it will set up a good buying opportunity for calls on this index, and we can trade the rest of this wave 3 upwards, and then we'll get out, buy some of these technical fib level zones, and I'll keep an eye out for these in the future. And overall, it's a little bit difficult as of now, previously it was a little bit difficult to identify this as wave 3 because we haven't gotten that bullish confirmation of some kind of impulsive manner that if we zoom to the 5-minute time frame, let's go to the 5-minute time frame, we can start to see over here there's no impulsive structure, but as we get further and further out, you can start to see there's more subdivisions. You can really start to subdivide it and see that impulsive structure, and that gives me very high confirmation that we are in this wave 3 in a bullish impulse wave. So overall, over the next week or so, a couple of weeks, expect a little bit of retracement for the wave 4, and then we'll push upwards and continue the move to some of these upper price targets. So somewhere around like 438, 437, 439, somewhere around there. And then we can figure out what to do after we've hit this golden yellow wave 3. Overall, this is the main focus of my trading over the next couple of weeks or so. Just focus on this golden yellow count. So we are targeting the upside for this wave 3. And now if you look at the tech sector. So tech sector, if we zoom out a little bit, we had another complex correction previously. So this is on 30-minute time frame. We had a WXY for a wave 4. So we came up for wave 3, complex correction for wave 4, and now we're working on this wave 5 of upside. And as you can see, this wave 5 of upside clearly subdivides into an impulsive wave structure. So we have a wave 1 up, wave 2 down. Now we're working on this wave 3, and we're just about done completing this, it looks like. So I have the upper Fibonacci 1.618 extension level at 359.78. And actually for today's price action, it did look like we are very close. We actually tried to touch it. We haven't gotten quite there yet, but we're pretty much right there. So we can expect some kind of wave 4 to hit soon. And this doesn't necessarily mean that it will be a drop. It could just be some kind of sideways price action. So over here, we could probably get some kind of like either maybe a triangle. We could get a complex correction. We could get maybe a zigzag. That's a little bit rare for wave 4s on the broader term time frame. But so we'll see what happens for the wave 4. But overall, I would say at this point, SPY, the S&P 500, has a little bit more risk to reward than the tech sector in terms of trying to trade it for calls. So everything looks good so far for the tech sector. It's been following the wave count pretty well. It's a lot easier to dissect than the SPY, because the SPY was down here at these levels. It was pretty difficult to dissect, but now we've got a more price action. We can really start to see what's going on and how it's unfolding. So overall tech sector, look for it to correct for a wave 4. Wouldn't try to trade this for any puts or anything. Wave 4s can be choppy, and it's not really easy to trade for downside. But we can try to target the wave 5 to the upside, and this will happen right around, this will probably correlate to some upside in SPY. So we can probably trade this wave 5 for upside as well. Now we're going to look for the VIX. So the VIX, as you know, is the fear index. And commonly what happens is when the VIX goes down, the indexes go up. So over here on the VIX, I drew some trend lines, and I want to point out what we can expect to happen over the next couple of weeks or so, and how this supports the analysis I just gave you. So let's look at the 15-minute time frame actually. So overall, this trend line in blue was a previous level of support, and we did fall through it. And I mentioned in my past video, if we fall through it, we can expect to gravitate towards this next level of support, which is at 13, and that I believe will be the bottom of VIX. So anything lower, I don't think prices for VIX will go lower than 13, because that's already very low. And as you can see, over previous price action, it has acted as support a very long time ago. Actually, it's not even, you can't even see it on the hourly chart. If I go maybe down to the weekly chart, yeah, you can see this is a pretty common level of support and resistance over here, the blue-yellow line, or sorry, the blue line. So the blue line and the white line, we can expect for it to touch in the future. And if we do gravitate towards this line here at 13.64, we can expect the markets to have some upside. And this would correlate, this would make sense, because if we're expecting SPY to go up towards these wave counts up here, we can expect the VIX to head downwards towards these areas. And today we did have a pretty good job report, and that was released today. So that kind of further led to some of the market upside. Obviously, there's no way to predict whether it's going to be a good job report or not, but that should help feed into some of the bullish momentum, as there's no really negative news dragging the markets down besides inflation. And the markets kind of just ignored the inflation news. It seems like there were some pretty big points being made by some Fed meetings a while ago, but the markets just shrugged it off. And it'll probably start to trigger some more downside when we do get around these risk areas. So I would still keep that news in mind. It's still there and it exists. But as of now, the markets are just kind of throwing it off to the side. And we'll probably revisit and come back to haunt the indexes in the future. But for now, we can say that VIX is heading downwards and heading for that 13 area. And if we do, let's say we come up for this, or come down for this wave 4 temporarily, maybe they retouch the trend line. If we do come down to touch that and we bounce off, we can expect the VIX to similarly have that same type of price action. So overall, we could expect to see the VIX maybe even try to touch this trend line over here in blue, and this is just a previous level of support resistance, and we could reject and then slowly make our way down to this 13.64, and that would result in the price action you see here where we head upwards. So, and that's my overview of what's going to happen in the markets over the next couple of weeks or so. I will always keep everyone updated in Discord with the wave counts and how they unfolded. And I apologize for just recently, it's been a little bit difficult to keep track of the wave counts on SPY, especially with this price action. I'm sure a lot of Elliott wave traders are having trouble dissecting this because this is not a very easy price action to really analyze in terms of technical analysis until you get this area right here. So this area really allows you to dissect it and know what's going on and get confirmation of the bullish signals. But so that kind of leads into this wave count. Overall, it's this is a higher level of confidence of happening than when we're down here. When we're down here, it's really unclear of what's going on because we could have a failed impulse wave and we could be heading downwards. But now that we've moved up into these mid 430s area, we have confirmation of this wave 3 in the process of forming. And we do still have some upper Fibonacci extension levels to hit. So I am bullish of the markets over the next week or so, and I'll see how prices unfold. And I'll probably looking for a good buying opportunity for calls. At this level right here, I would probably not recommend it. I would say this would be more of a FOMO play if we do get into calls right here. I would wait for a pullback for a wave 4 and then try to get into this upside right here. So we're retargeting this kind of price action like that and up to these levels right here. And so that's going to be my plan over the next couple of days or so. So I'll keep you updated here in the YouTube as well as in the Discord. And as always, thank you so much for watching. I hope you have a great 4th of July, and I'll see you in the next video.